Hey, welcome everyone. Part 2 of technical analysis, price action trading. In this video, I'm going to be going over some important key points that you should be looking at to determine your market type. Okay, that's important. I said that in the last video because the most losses occur when the market type changes and people don't realize that the market type has changed and they're trading yesterday's game when there's a whole new set of rules today, and they refuse to realize that they're wrong and they take horrendous losses, and we're trying to prevent that for you. Okay, but before we get into that, I want to please ask you to like and subscribe to the channel. Make sure you ring the bell so you don't miss any of the trading tips that I put out. And without further ado, let's get into the trade analysis that I did for Park Avenue Trading, the trading room itself. Now, the one thing I want to say is that everything that I'm going to be talking about in this video is documented. It's on my Telegram channel. I did it before the market did what it was going to do. I always do that. It's like I never will talk about something after the fact and say, "Oh, I did that." That's a bunch of horse shit. Okay, it's like, you know, you gotta be completely candid about what you're doing, because without it there's no validity. Okay, and so everything that I'm going to be talking about here was documented before it happened. Matter of fact, probably hours before it happened. Okay, so let's talk about sterling dollar. And the first thing I want to do is I want to go to a little bit longer of a time frame chart. I want to go to a daily chart. And here we are. All right, so if we were looking at sterling dollar on a daily, okay, what we're going to find is that we were in a downward movement. Now, you could say, "Oh, that's great that you say that now," but how would you have known that we were in a downward movement, say, from here, like this area right here? I wouldn't have known that we were in a downward movement from there. I would not have known that. What I would have thought at this point, where my highlighter is right here, is that we were in a sidewards movement market. Like I would say from here to here was sideways. I would have been looking at this as like we were in a sideways market daily wise. Okay, then I would zero in on my 1 hour, which is what I like to trade daily, and I try to find points of interest, like what I call buy envelopes or sell envelopes, and try to get involved at a marketplace in a buy envelope, so a sell envelope. Now, in my course, Tower of Price, I go over exactly how I define a buy envelope, sell envelope, and what I do within those buy envelopes and sell envelopes. So it's an important concept, and it's obviously, you know, go buy the course. But I guarantee it comes with a money back guarantee. It's stuff you've never heard of before. But anyway, I digress. It's a little bit of self-promotion there. So anyway, so I wouldn't have known, all right? How I would have known that we were breaking down, all right, would have been once this low pivot was broken, it would have been the first crack in the glass to determine to me that the marketplace was turning down. Now, you could say, well, it's only a little bit blip below, and then it came back up. Yes, it did do that, but that for me, any type of a break of any type of pivot, that's a warning sign. That's a warning, you know, and because if this marketplace was truly in an upward trend, it wouldn't have broke this pivot. 85% of the time, it wouldn't do that. Okay, so, you know, with technical analysis, it's riddled with contradictions. You know, like you're supposed to trade in the direction of the trend, yet you're looking to buy a double bottom or sell a double top. So, like, that's a contradiction. You know, so in this game, you know, they're guidelines. There's not rules. So, but you have to have some type of guideline, right? So I say one of my rules is if a pivot point's broken, that's the first crack in the glass. That's what I say. There's a crack. The glass didn't shatter yet. It's a crack in the glass. Now notice, this is daily, right? So we get a movement up. Does it take out that high? No. So really, there was a low-risk sell up here. Okay, with the stop over here. So basically, if you would have sold, say, 127, say, 40s, right? The stop would have to be like 128.10. All right, 60 pip risk. Now, boom, the marketplace does break down once it starts going into its downward movement. All right, so we get a pivot low here. Now, before this spike up, we were in a channel. We were in a sideways moving market. Right here. This was sideways. All right. Now, if you were playing yesterday's game, okay, maybe if you sold up here for whatever reason, you would have been okay because you came back down. But let's say, for instance, you were looking at this market and you sold down here, thinking, well, it's going to break this bottom because you were reactionary. You weren't like looking for the next move of significance. You were like, oh, it's gone down. I missed it again. I'm just going to sell it, and then guess what? You're eating crow, right? Now, if you were smart, you would have taken, your stops here. So it would not have been a great scenario. But because you didn't understand that we were in a sideways moving market because you were playing yesterday's or the previous game. So let's just take this idea right here. We are in a sideways moving market. Now, if I go to my hourly chart, all right, and here we are hourly, all right. So, and this is basically what I told the trading group, okay. And this is a market tell or a market. It's not a market law. I mean, they were written as laws back in the 1920s. And actually the early 1900s, where this first law came from, or I call it a market tell, because a law has to be, for me, a scientific law has to be able to be proven over and over again. And these aren't, this is not, they're not exact. There's always a little bit of something that's nebulous with this. It's kind of smoky and, ephemeral sometimes, so you need to understand that, like I said, that they're guidelines. All right, so if I looked at, now this is basically based off the daily, right? I have here's my main channel from the daily. Actually, let me go back to the daily, and let's change the color just so we can see where the main channel is compared to where we're at right here. Okay, so this one, let's who knows? Let's just make it purple or something, right? We'll make this one. Same thing, same type of whatever, purple. Okay, so here was the main channel off of the dailies. Okay, so let's go to the hourly chart. All right, so if I look at the hourly chart, oops, I'm going to find basically the same channel. All right, or a channel on the hourlies. It's going to be there for quite a while. Okay, so if I just do this, so here's my hourly channel. Right now, I have no idea, like, if this marketplace is going to break the bottom or if it's going to break the top. I don't. All I know is that it's a channel. So therefore, I would buy down by this bottom of the channel. I'd sell up over here. Great. Okay, until this hour happens. That is the first close above this channel that I have on the hourlies. That is the first warning. Now, there's a rule that says that the close is king. Generally, the close is king, and the marketplace will, they're basically saying that should go up. But I have a rule that says that the close is king, but the open is queen. And the king's not going anywhere without the queen. So the king said higher, but the next hour the queen said no. Sorry, we're not doing it right now. I'm not going to have it happen. Sorry, she put her foot down. So the marketplace came back into the channel. But that gave Park Avenue traders an ability to get into a position with a low risk. And this is what I said to them. I said, exactly what I just said. They understand that the king and the queen, the queen is actually mentioned the first time it's mentioned is in Forex Confidant, my book, when we talk about trading the open. I have an open indicator, like a way that you could trade opens, and that's in Forex Confidant. A more selfish self-promotion. But I'm proud of my books. I have really good techniques in there. They're completely different. There's stuff that we developed in Casa Espremi Torino to be a proprietary trading desk, because really we had no customer base. Our customer base was like non-existent. So we had to come up with proprietary trading systems. And I basically worked on every one of them, every one of my traders, and most of them were my ideas. And we worked to see if there were any viable ideas. And there were some really good ideas there, as long as you follow the golden rule. Cut losses and let profits run. And when you're letting profits run, step on the gas. Push forward. You're making money. The market's agreeing. That's great. Do more of it. That's what we talk about. Okay, so Queen said no, came back in. Now, there's something that we in Tower Price to discover that's called, that I say is called a buy envelope. Okay? And I'll just show you what the buy envelope is right here. Here's the buy envelope, okay? And let's make it the same. Let's make it a different color. Let's make it this color here. And we'll change this color to same color, that red or whatever the heck it is. Whatever, it's close enough. This whole area was the buy envelope. Okay? So, what I said to them was, Queen says no. What we want to do is we want to get long in the buy envelope. With a stop at, I put it at 121.40. The stop was here. Okay, right there was the stop. All right, so we got long anywhere in here, 60, 75, 68, 75, 80, whatever, anything that's below this, so it's 73. So all in here. So we got long here. Here is again the close above. The king says yes. The queen said yes the next hour. Okay, now there was still a slight retracement back down, and it took a few hours, but look at the movement up. Now, this was the daily, okay? I expected there to be resistance here. I thought the marketplace was actually going to pop back down here because that was the main resistance point. This thing is broken through that, so most likely we could trade back down to this, okay? And then continue higher to maybe 125, okay? But that, again, if you would have got involved in a trade here, you were long here, and I told them, you're long here. Well, what do? You add when you break this top. You press on the gas. The market's telling you yes. Now, I didn't discuss that with them, okay? But that's what I did. I said, I'm pressing on the gas here. I'm pyramiding my trade times 1. So whatever I had on, I doubled. And I put my stop at my average. Never went against me on this. This is a beautiful trade. Never went against me. Shoom, straight up. Wonderful. And we went over that in the trading room. So by understanding the market type that I was in a sideways market on the dailies. I ratcheted down to my time frame. I started looking for comparisons of where's the sideways market here, because the dailies is showing that the hourly has to have what the daily has, but only more compressed. So I try to find that, and considering that is a smaller time frame, it gave me a good indication of when we have the potential to move, to break out. I didn't know that this was going to happen. I had no clue that top was going to be broken off of the daily channel. I had no idea. But all I knew is that I wanted to get in at a low risk, and the market's going to do what the market's going to do. There are some types of unknown X factors that happen in a marketplace that drive your account forward. They're not like, you don't know this stuff. That's why it's so important to basically have, your where your stop is, where you say uncle, because you never know when this stuff's going to happen. But when it does happen, okay, and you're in the right position, you know, that's when you make the most of your money by that X factor. Okay, so let me see if there's anything else I want to go over here. Oh, yeah, I'm going to end it with this. You know, I read a long time ago when people asked about, like, does the Holy Grail trading system exist? It doesn't exist. There is no Holy Grail trading system. There's systems that are more profitable or more accurate than others. Now, don't get caught up with accuracy in like you know, there's people out there that profess 90% right. 90% right for 10 pips, but wrong for 150 on the other 10. You know, so you get 900 pips, then the other 10 you get losing 1,000, you know, something, or 1,500 pips. So therefore, it's not profitable. So don't get caught up with like win-loss ratios. What you really need to know is like what the standard deviation is of your R values, like how much what is the standard deviation of your R, and you know, your win-loss ratio comes into play. So then you start looking at what position sizing should be, what your position sizing model should be to get your objectives. That's a whole other video when we talk about position sizing. But a gentleman once wrote that the Holy Grail system exists in the spiritual answer between two polar opposites of success and failure. And the way I read into that was that the way that you look at losses is going to determine whether or not you're going to be successful or not in this business. So it's the way that you look at failure will determine whether or not you will be successful in really anything you do. So what I'm trying to say to you is that if you have a problem with like looking stupid or failing, you're going to lose in this business, because this business is a loser's game. And what I mean by that is that all the analysis that you do, everything I go over here, is really for naught, because what could happen is the marketplace could just change direction for whatever reason, because the markets do that. But you got to understand that, you know, it's okay. Just get out. You know, there's a discussion of how, you know, basically, if you looked at, you know, a bird when they learn how to fly, you know, when they first leave the nest, a bird goes into a trajectory. It looks like the bird is going to smash right into the ground, And before they hit the ground, nature basically taught them how to fly, and then they come up from that downward trajectory. And that's us too, man. Okay? Failure is part of the game here. Failure is really everything in this game. So you need to embrace like your losses. You learn from your losses. Okay, now I'm not going to say they're pleasant. I'm not saying losses are pleasant. I'm not saying it at all. I'm just saying that there's lessons in each one. And you know, there are many great traders that lose 7 out of 10 times. You know, Paul Tudor Jones didn't have that great of a track record. Paul Tudor Jones was probably wrong 6 out of 10. But Paul Tudor Jones also taught me press on the gas when you're right, because that's going to make up all your money and it's the hardest thing to do. It's very hard to do, because you always have your mind is always going through what's known as cognitive dissonance. Okay? The human mind always strives for how can you put it? We're always looking for like an equilibrium. Okay, so when you have a trade on that's making money, there's another part of your brain that's saying close it, get out, take the money. It's going to reverse. It's going to change. We're going to lose that money again because you have past prior experiences that basically are telling you that, because the subconscious mind learns from past experiences. So therefore, you have to learn how to trade what's happening at this moment, not yesterday or the day before or the month before. You have to learn to trade what the chart's saying right now, what the market's saying right now. You can't trade yesterday's experience today. So I'm going to leave you with that. And again, please like, subscribe to the video. Make sure you ring the bell so you don't miss out any more of my trading tips. Go over to parkavenuetrading.com. Check out the blog. Sign up for our newsletter list. You get a lot of cool information. Look to see you in the next video. Cheers.